Hey guys, Vet here. Sunday night about 8:20 and Eastern, and I just wanted to run through just the SPX chart. I'm not going to necessarily give a detailed roadmap. I will maybe in another video, but just walked in the door. Construction crew still at my house, but I wanted to come in, check in, and I got to start this 2-hour prep for the old colonoscopy tomorrow. So fun stuff for me tonight. That said, here's a monthly on SPX, and if you look at it, you're like, wow. First thing you should realize is going back in 16, 17, look at how many green months we have, and look at what the red months look like. Two red months, a red, a green, a red, and then COVID, um, another retracement September, October, vertical up through really December, January. Um, Again, this is the date. This is when I got wiped out on the airplane trade, and it was a green month. But again, so the month is just the month. But when you start looking at larger candle bodies and the moving down, we've moved up and small. And again, you've got gravity points up here in the monthly. They're not the same, but it does give you some ideas as to where a lot of open interest and a lot of firms are still not hedged, but they still have positions that have built from there. Go from a monthly down to a weekly, and then I'll start drawing in. Not drawing in, but I'll put in all the stuff. And you get into a weekly, and you're like, well, holy heck, man! Since 22, really, we hadn't done a whole bunch, right? Here's a high of 22. Here's a low of 22. Um, and so we've gone just lateral. So but to give you an idea, we still have two weekly gravity points that are higher than us. Um, and so as you start to look, everything we always talk about looking left. Well, look left, and you're at 4192 is the January February 2nd high. Right now the March lows are here. Um, if we take that out, we're going to go down to the December lows. January and then December lows. If we take that out, then we're going to go back to November lows. If we take that out, then we're going to go back to October lows. So you kind of have an idea. Well, when you look left, if we take out February highs, you're going to look to fill this gap up to 42.26, 42.25. There's a little fair value gap. There's a gap there. We get above that, we're going to probably work to 43.20. 22. The old inflection point was at 43.30. And if we get above that, then we're going to look left and we're going to go all the way back to last April highs. And it'll be 52-week highs. So again, you don't have to be a rocket scientist to kind of figure this stuff out. Now, we work down to the daily, and now we got some stuff at play where we start looking at, a range, even this would be considered a range. Boom, and then we gapped open, and then we came back and we filled the gap, and then we pushed back up. So this was an impulse move. This was really an impulse move up into February. We put in February highs here, and then we held it for 3 weeks, gap down, back up, and then we put in the March lows. And then again, we bounced off the March lows. That's how you kind of know. Is it supply? Yes. Why? We breached structure. We took out the March highs from this bounce of the low right here. And it was violent, right? We came down and we went back up fast, and it was vertical, almost a V. Boom, kiss the channel goodbye, and then we launched. And that's what you're looking for in the market. Well, so where are we right now? We're right now right where we were right here. Now, you see we're at the bottom, we were at the bottom, we were at the bottom, poof, right through the top. Where are we right now? We're at the top and the bottom. We're at the bottom and the top. We're at the top and the bottom. I have no idea. But we know if you draw, I can't draw a box or all my colors are going to appear. But if we draw a box here, we're going to play the breakout to the upside or downside. Now, looking at just Momo, and you guys don't have it yet, just bear with me. my personal life, moving and everything else, and having medical procedures are, they've got my attention right now. But in this Momo, moving in this, we talk about embedded, where both of them this week were above the whatever your overbought line is, but embedded. So be careful not to take it. What we've talked about with Case, doing the 4-hour Bollinger Bands is when ES and or SPX, when they're trading inside the weekly supply and demand zone, guys, I think those Bollinger Band trades are home runs. Where you got to be careful in the Bollinger Band trade is when we have this. Boom, boom, boom. Bullet, bullet, maybe out of bullets. Maybe a bullet, but maybe your bullet and you're down. If it's your third bullet and you're oversized, maybe you're down 20% on your portfolio, like your total portfolio. So be careful. Don't say it always works. I promise you, there's no such investment in the history of the world. So, but as long as we're within there, the 4-hour Bollinger Band trades should be money. I mean, the EV is going to be substantially higher with the price action inside the weekly supply demand than it's going to be if the market's moving. And if you're wrong here, right? We squeeze down. You go in to sell a 4-hour Bollinger Band, you go to take profit, and we get up here and boom, it leaves you behind. You're going to take a 50% loss, or whatever your stop loss is. So always know what your abort criteria is for your trade, your position that you put on. That said, looking down at Momo, this is how I read Momo. The yellow and the blue are nothing more than just it's a blend of stochastics, really SKSD, RSI, and a CCI module embedded inside these two lines, and they're designed to kind of give me when I don't have to count embeddedness on this, as Ira Epstein talks about, Moose talks about, because of the RSI and the CCI components. Okay, the dots are nothing more than the same components looked at on a weekly level. So SPX right now is weekly oversold, and daily it is correcting down. How I would read this is I would venture to guess that Monday, Tuesday are going to be flat to down. That's how I would read this. The daily could get down here below the oversold condition, keeping the weekly overbought. And then on Tuesday, maybe Wednesday, we're probably going to push back up. Again, I don't think the market's going to give us a green light to go either direction ahead of FOMC. Now, remember the monthly, we had 2 gravity points up here. And then the weekly, we had 1 point up here and 1 point down here. Now on the daily, we have 2 points right on the day. Well, guess where gravity points, guess what they're manufactured for? Your daily charts. This is what Momo's manufactured for. My daily chart. That blue and yellow tells me 9 times out of 10 where we're going. Have we been in a somewhat of an uptrend since the 10th of April? Well, Momo says we were. And since the 10th of April, we've moved from the bottom of the weekly supply demand zone up to the top, above the top, and there was good money if you were trading that to the long side. All the way up to, we peaked here and Momo flipped over the next day, which was last Wednesday. And so I use it somewhat for the roadmap. The data really, really drives it. Now, what data is important? The first, to me, upside data that would be important on SPX is walking over here to this candle, February 7th. The high of this candle is 41.75, 41.72, 41.75. The candle body itself is 64. If I pull it over to the right, we're here at 67. Somewhere between 68 and 77, 75. Somewhere in there is the upside target where I think bulls need to get that. They need to hit that mark this week. If they don't hit that mark this week, then this will be the minor top for the market, is how I view it. Now, to the downside, what am I looking at? Well, if we work through, what our weekly supply and demand is going to be, I don't know what it is tomorrow. But I can tell you on this push higher here, 4,100 everyone's using. I would look at the top of this candle, and if we get a close underneath 41.26, 41.24 in this, if we get a close below this level this week, I think we're that will tell us that that's probably going to be the weekly high, last week's high. So if we get a close underneath this 41.24 to 26 on SPX, again, I don't know where the weekly demand is going to be for tomorrow. So, but I'm just saying, going back to this zone, if we close below this recent swing high, where we put in a top, and then we came back down, and then we just breached it, this was the move. And you can do this move off the 24th, or you can do this move off the 13th. But this candle, October 3rd, was a cycle day. The 3rd and the 4th, it was a cycle day. So somewhere between the top of this candle at 24 and the top of that wick at 33, but I'm giving it 24 to 26. Underneath there, I think we're in trouble. I don't think we're in trouble. I think the bears are going to have it, and we're going to work back to close this gap, back down to 4,000. And again, there is a gap down here, and the SPX will work to close that gap. Now, if we close below 4,002, where's 4,002? If we close below 4,002, there's no gap over here. That's already filled. Yeah. So if we get down below 4,002 in this zone right here, I'll go ahead and tell you that I will short the next bounce with size. That will be taking off May stuff, because underneath 4,002, we are 100% going to be pushing down to March lows. No question. So again, roadmap. So now let me throw all this on, and people can be like, what the hell happened? Oh my God. This was the same as last week. Didn't change. This gap is still sitting above the February 2nd high. No change. I did, if you go out to the monthly, just to kind of give you guys an idea, is I did put high to current month high. There's a trend line there. Okay, and then you got this little stuff here. I do it to a weekly. I haven't done it in a long time, but I just put it in to see. If I go to a weekly chart and I pull this up, February 2nd, August, down to October, 8 bars, 8 bars. So 56 days. So 8 weeks, boom, we hit a low. Bounced up 7 weeks. Didn't bounce up as high. That is very bearish. Right? 8 down, 7 up, didn't clear the 8 up, but we did get to the half point. Then we come back down, but then we only drop for 3 weeks, 3 bars. Boom, we move up, we got 6 bars, and then 6 bars down, and 5 bars up, 3, 4, 5 bars down. I don't know. We'll see. That's what we're getting ready to get into. When's it going to be 5 bars down? If we break 41.24, we're probably going to go to at least 3 bars down. If we break 4,002 SPX, then we're going to work 5 weeks lower. That's just typical math. Now, on a weekly basis, this is how I know my dots are no longer weekly basis. Now the weekly basis on Momo are the actual lines. And so the weekly's ready to move over. It hadn't yet. And we can stay up here, right? right here. It starts to roll over, and then we spiked up. Starts to roll over, and then it continues, and it holds it for 3 weeks. That's why you don't trade off of those things. You just use them for confirmation. But as I get into the daily, and the daily is the most important for all of us right now, where are we? We still have a gap above us and we have a gap below us. The gap below us is the 4002 that I mentioned. Underneath there, we're going to fill that gap, and you got the inflection point, gravity point C right there. There's a lot of confluence there. Underneath that, and this is what I talked about, the March lows. If that breaches, that's not breaching this week. We might go, depending on the earnings, we might drop down to, 39.80, 39.85, 39.90. If so, I'll be a buyer probably. In the event that we breach that 4,000, we get a close underneath there, this area right here is going to be active, like radioactive. You got the half back from August to October. You've got a supply zone that was drawn on March lows. You got an inflection point. You've got a downtrend line. You've got the 382 from COVID. That's COVID lows. There's a lot down here. The 618 from August to October. There's just, my goodness. So that's an albatross waiting to be activated. Above here, where we currently are, 41.55, guys. Everyone knows that's the halfback from all-time high to October lows. Okay, that level matters, and we hit it. We danced with it last week. We're going to probably dance with it again this week. Are we going to get above it? I'm not sure. If we do, and we get above, 72, then I'm looking for us to go back and push up to 41.95. And to me, if we get to 41.95, why on earth wouldn't we go fill the gap? We probably would. That's that line coming in from the monthly, all-time highs to this month's high, April highs, and that's where the trend line is. Really neat when you do the weekly, and then you go and look and see, do we need to adjust it for the day? Like right here, we would need to adjust this for the day because the week was here, not here. So you have to be careful on keeping those on. But I just did it tinkering with the charts early Saturday morning while I was waiting for the data to work. Again, I take Momo off. We do have FOMC next week, a week from not this coming week, the next week. This week we've got huge earnings. Amazon, Google, Meta, Cat, ExxonMobil, Chevron. We got across the whole spectrum to move the market. So anything can happen. Was really interested to see the data, and I've already posted PVI. Again, the safe play right now is 4,000 and 42.50. That's the safe play. I don't know if there's any premium there. I haven't looked. I haven't even thought about selling options yet. I'm just sitting here thinking about 41.95 SPX target if we get a close or we hit 41.72 this week. That means a new weekly high. If we do hit a new weekly high, I think this week will be the high, and we'll probably sell off come FOMC unless the models are wrong. That's to the upside. To the downside, again, I still think 41.24, 24 to 26, that mid-April time frame in there. I think that zone is going to be sticky. Last week we had 41.15. The 2 weeks before it, we had the weekly demand levels underneath 4,100. 40.90 is, again, 41.24, down to 40.90, the inflection point underneath there, and maybe this trend line. Again, the trend line coming up from December 22nd. Yeah, that's right, December 22nd to March 2nd. And so I have that trend line, and that trend line, it doesn't mirror it. It's drawn, but it's pretty close to the lows, October lows coming up to the March lows. And so I think we'll stay in this channel. If in the event that we do fall out of 40.90, then these next three levels, 4002, the gap down to the inflection point number 2 at 39.75, and gravity point C at 39.60. So 39.60 up to 39.80 is like absolutely magic. I mean, that's going to happen quick, and that'll just happen in this next zone, which could easily be 27 bars, 29 bars, 24 bars. This could be 20 some days. You're talking 4 to 5 weeks of it working down. It would take 3 to 4 weeks for us to work down probably to the March lows, back to into the 3800s. But again, it's still potential. So rambled on for about 20 minutes. I got to go drink all my procedure prep stuff, which is absolutely the nastiest stuff in the history of the world. But I'll get through it, and until tomorrow, I'll be on later on tonight. I've got a million things to still get done before my procedure tomorrow. So I haven't answered DMs since Friday. It's just been family and moving and dealing with just life. I wanted to do one with InQ and analyze the NASDAQ from the future standpoint and do SPX on instead of ES. And that way, because I know some of our NQ traders have, again, they need those numbers, some different numbers. Again, there's not a tremendous difference between ES and SPX. I think they were 20 points at the close on Friday. So I would imagine most of the models are going to have them about 20, 21 points apart, SPX up to ES. So just add 21 and that's the math, or use your ES and subtract 21 and that's your SPX math. So with that, guys, I'm out. I'll be on in a little bit. Peace.